Hi everyone, it's Kristen once again with C. Jones Consulting. And in case you have forgotten or if you haven't watched any of my previous videos, I am the CEO, owner, and senior lead consultant for my consulting firm and business. And today I thought I'd talk about a huge topic that has definitely, I'm pretty sure crossed the minds of a lot of first-time home buyers or prospecting people looking to purchase homes. Why in the world did you get denied, or why are you potentially going to get denied? Let's talk about it. So let's back up just a little bit. So the purpose for my service and my business is to definitely provide guidance, tools, tips, and help for the underserved community, which would be the first-time home buyers. A lot of times when you're working with banks and credit unions or any lending institution, period, if you are not qualified or if you get denied, chances are that loan officer or whoever you're working with is going to send you over to either the credit department or the down payment department or savings department, and they won't really explain to you what really went wrong. So that's what I'm here to talk about. I'll go over the few things that I've noticed, or the few reasons that people get denied, and kind of what to do to combat that. So the first reason a lot of people really get declined or things happen is because they can't afford the house that they're trying to get or the loan that they want. So these are the people that go out to Zillow, they go out to Trulia, they just start, filling their minds and eyes with things that their wallets just cannot support. And I'll give you an example. So my fiance and I, all together, we make around, I'll say about $87,000, $88,000 a year. I make 36, he makes about 45, give or take. And in our case, if I were to go look at a home that's worth $600,000, and I went to my local credit union that I bank through and I said, I want a loan that is worth $600,000, chances are I will probably get turned around and be escorted to leave, because just being silly, but just because our income just would not support that. And we also have a kid, so it just wouldn't fit, the monthly payments wouldn't fit anywhere in our budget. So ideally, our budget right now, starting out, will probably be around $187,000. That will equal out to almost what we're paying in rent right now. So that fits our budget completely. So for those people that get denied because your income does not support the loan amount that you're looking for or the designated house that you want, that is probably the reason. And that's a good time for you to sit back and actually have a reality check, and also speak with someone that can help you or guide you on the right path to finding something that really fits your budget. Not necessarily speaking with a realtor or a loan officer, not to toot my own horn, but definitely speak with a consultant. And the reason why I say that is because it's extremely no pressure, and you really get a feel for what your pocket can support. And, we can definitely speak with a realtor to see if there are options in your area for a loan that looks like that, so you can kind of get an idea of where your budget will fall. The second reason that a lot of people get declined, and this is kind of a commonality, is because they pose too much of a risk to the lender itself. That means either their credit score is too high, or their ability or history of making payments is not so hot. So what I mean when I refer to applicant being a risk, let's say you're looking to purchase a home, you have the right amount of income, but you have a 400 credit score. The chances of you getting that loan are low. The reason is your credit score displays you as too high of a risk for any available loan option, and your interest rate, if they were to provide you that loan, which would definitely shock me, would be extremely high, because they have to be able to ensure that you're actually going to pay the money back. So credit is something we'll totally discuss on a different video, but for this one, just making sure that you understand if you come across as a high risk to the lending institution, chances are you will not get that loan. But in that aspect, I will definitely suggest that you shop around to all the available banks, credit unions, or brokers that can definitely, or try to find something that would match your situation. The third reason a lot of applicants get denied is because their debt to income ratio is extremely too high. What that means is your current financial state, you have too much debt in comparison to how much money you actually bring home monthly. An example of this is if you go into a bank and you have, let's say, $5,000 in credit card debt, you have like $20,000 in auto loan debt, and you only make $40,000 a year. Chances are your debt to income ratio is extremely high, and the idea of tacking on an additional debt like a mortgage would cause, I would say a rift, but would cause an issue for you in your pocket specifically. But then it also leaves the lender a little worried that you won't be able to make your payments on time, or you'll fall short or fall behind. And that can, eventually lead into foreclosure. So that's another reason that a lot of applicants may get declined. It's because of their debt to income ratio. And that can definitely be determined even after you get pre-approved. It can actually be determined when you're actually getting your documents processed, and they actually take a in-depth look at what you're really bringing home, meaning looking over your tax documents. So that's something to keep in mind. The final thing, or final reason, and this totally varies, so I'm just speaking hypothetically, is because you do not have anything saved, or you don't have any collateral to put down in regards to the loan that you're looking for. So that refers to a down payment and your reserves, of course. So in terms of a down payment, if you don't have, for my clients, I suggest between 5 to 10%. So you're going in there with some sort of equity in the home. If you're going with 0% down, and I'm not talking about veterans, that's a totally different subject, you're putting yourself at risk, because that's putting the property at risk. Because let's say the housing market in your area takes a tumble right when you buy the home, and you try to take cash out of the property, chances are, because you just started that loan, you owe more than what that home is worth. And that can definitely be what's considered your home is underwater, and that can pose a problem. So lenders would look at you like you didn't have any sort of, savings to combat that, or to come in to secure the actual property. And think about it, having a down payment also makes you extremely competitive in the housing market. So if you have anything to put down towards a home, I would highly suggest you do that. And this is for people actually going into the process initially. So I think that's it. That's a good place to end off today on today's video. In the comment section, in the description section, I will have a link to my free ebook that talks about you actually being what type of risk you are to the lending institution. So it kind of piggybacks off of this video, and I highly suggest anyone that is looking or thinking about buying a home, definitely get a free consultation with me. It's free. I have that link also in the description section. And to end off on a good note, I really hope you guys enjoy your weekend. Happy Easter to everyone, and I hope to see you all very soon next Tuesday. Thank you so much for listening. Have a great day.